As investors consider the potential market consequences of a second Trump presidency, most Asian stock benchmarks fell on Thursday. Trump's fiscal and trade agenda is driving big moves across global assets. The market verdict on Trump 2.0 post the election day is both optimism and caution. Echoing the gains on Wall Street, benchmark indices in Japan climbed for a third day. However, stock indices in Hong Kong, South Korea and Australia ticked lower, driven by fears of Trump's trade tariffs and foreign policy. China's benchmark index slipped for a second day, dropping as much as 1%. Worries about US-China trade war 2.0 led a regional stock gauge lower for the second straight day. Kyle Roeder, a senior market analyst at Capital.com, told Bloomberg, and I'm quoting here, "I think now the world has to be seen through the kind of lens of Trump effectively and the kind of zero-sum game and the bilateral way that he approaches foreign relations." He added that China is not looking quite as strong subsequently. Those trades are likely to continue to manifest, at least for the time being. Again, it's all a part of that Trump thematic. Following a 1% surge, which was the dollar's biggest since March 2020, the greenback climbed further in Asian trading. Gains in the U.S. assets come on speculation that Trump's proposed tax cuts and regulatory rollbacks would boost business earnings. U.S. equity benchmarks soared to record highs. The S&P 500 hit an all-time high, rising over 2.5% to mark its best post-election day in history. Wall Street's fear gauge, the VIX index, tumbled on Wednesday by the most since August. Almost 19 billion shares changed hands on U.S. exchanges, which is 63% above the daily average over the last 3 months. Bitcoin spiked further on Thursday to a new high of over $76,000 after breaking March's record in the previous session. Elon Musk's bet on Trump seems to be paying off already, with Tesla stocks soaring. Trump Media and Amazon stocks were the other two highlights on Thursday, hitting new milestones. In contrast, those assets widely considered anti-Trump crashed. The Mexican peso, Chinese yuan and the Iranian rial crashed to new negative milestones. Greenback's rally weighed heavily on global currencies and commodities, while some calm returned to the forex markets. Emerging market currencies were still under pressure after tumbling the most in 21 months. Gold traded in the red after crashing nearly 3% in the previous session. The yellow metal is down more than $1,000 from its record high. This comes ahead of Thursday's key Fed meeting, which will be the focus for markets now. And our correspondent Susan Tehrani brings you more from Times Square in New York.
The market surge following Donald Trump's election signals a renewed confidence from investors, particularly those anticipating lower taxes, fewer regulations, and policies that support traditional energy sectors. Also, for businesses, this kind of market rally can mean a more favorable environment for expansion, hiring, and investment as well, especially if they operate in sectors likely to benefit these policies. However, it also brings volatility. The surge reflects optimism, but markets could react to political uncertainty or shifts in policy. For now, businesses are watching closely, ready to capitalize on potential opportunities, but also prepared for a bumpy ride. Susan Tehrani reporting for WION from New York with video journalist Neeraj Patel.
For latest news, download the WION app and subscribe to our YouTube channel.